The net foreign outflow from Kenya's capital markets was 1.5 billion shillings in the month of April, May and June this year, sustaining a trend that has been growing. This was due to the ongoing political tension in the country that has affected the performance of the market and a major weakening of the Kenya shilling. The Capital Markets Authority says it's engaging key market stakeholders on measures that would spur domestic and foreign investor participation in the capital markets.
The Nairobi Securities Exchange has witnessed a serious hemorrhage of foreign investors, with foreign investors withdrawing close to 24 billion shillings from the market in 2022, the highest in 3 years. Foreign investors have been rattled by the ongoing conflict between Russia and Ukraine, with bargain hunters hedging their investments in safer markets in Europe and the United States. Latest market soundness report by the Capital Markets Authority shows that a net foreign outflow from Kenya's capital markets stood at 1.5 billion shillings in 3 months to June, which is a drop from the 14 billion shillings recorded in the first quarter of this year.
Looking at the regional markets, even given the issues we are going through, the returns we've seen so far have been very good, and therefore it's very likely that the outlook could improve, because I think most of the investors international are looking at where perhaps they are making the highest returns. So
CMA CEO Wycliffe Shamaya says that the month of June marked the first instance since February 2022 where the market observed a net capital inflow of 113 million shillings, a sign of confidence from investors.
We've seen a continuation of net foreign inflow. And it may be interpreted, as I said, on two fronts. There's been announcements globally around profitability and general feeling that the equity market that was deemed to be performing poorly because of these developments in NASDAQ and all that, which is positive, it seems that it might be on a resurgence. That's number one. There have also been the facilities that have been provided by our development partners, which obviously would abate the supply of foreign currency, which was one of the issues that were raised by the MSAI in their report.
The authority is in talks with Morgan Stanley Capital International, or MSCI, which is an investment research firm that provides stock indexes, portfolio risk and performance to advise on the best ways to boost market performance. The authority further adds discussion are ongoing to tap other investment vehicles like the devolution bond, project bonds, green bonds and Islamic bonds. Wairi Mujenga for Prime Edition.